In today's video, we're going to go through the process of downloading and setting up your Robinhood account. You can use a variety of brokerages. The idea is you've decided you're ready to invest. We're going to do that process with Sam, and we're going to be doing that on Robinhood. The kind of information it will ask you for is all very, very basic. And don't worry, these institutions are required to gather this information. Nothing's too complicated about this process. You're going to go to the App Store, you're going to search up Robinhood, you're going to hit the download button as you would for any other app. I'm sure you're familiar with that process. Yay!
Yay!
The process is very, very guided. It's a lot like signing up for anything else. So yeah, email address, obviously. Choose a very, very strong password. Sam's password is... Again, legal name, they are required to gather this information. On top of email, they'll most likely need your phone number as well. So they'll require your date of birth. You do have to be over 18 to use these apps. Input your primary residential address. They will ask you if you're a US citizen. I believe if you want to invest in the US market outside, there'll probably be more a local brokerage in your country that allows you to invest in US stocks. And then it will ask for your social security number. As I mentioned earlier, again, do not be freaked out by this. They are legally required to ask for this. So they'll ask you a few questions about your investing experience. If you are a new investor, I highly recommend letting them know that. So just be honest with your level of proficiency. They'll ask you some employment information. They'll ask you some additional questions about insider trading. If you do not know the answer is most likely no, especially if you don't understand the question, especially then the answer is most likely no. No. If the answer is yes to any of those, you will definitely know.
Just some legal agreements.
They got all their typical legal mumbo jumbo. So this one is just asking if you want to use margin. As a beginner, definitely do not use margin. So you can uncheck that if you'd like. If you ever plan on using margin in the future, you can go to check this. If you agree to use margin, this does not mean you have to use margin. So you can just leave the option open for yourself later.
That's a stock lending agreement.
So the stock lending agreement, I believe this is just them allowing your stocks to be used for options. I won't go into exactly what options are here. The main thing is if your brokerage agrees to take responsibility if those stocks are lost. So it looks like Robinhood completely covers your stock with a third-party coverage, so there's no risk of agreeing to this. Basically what it means is they'll allow you to, they'll take those stocks, allow option traders to use them. You still own the stock, I should be very clear, but it allows it to be used in option trades, and it will allow you to earn some interest. So some potential additional gains, and because it's backed by a third-party bank, there is no downside or risk of losing those shares.
Personal information sharing.
For me personally, I like to be a little bit more private on the internet, so there's no reason to give them your personal information unless you want more targeted ads, which in my case, I don't, but if you decide that that's for you, that's totally fine. They'll ask you how you heard about them. Maybe if you have a friend that's already on Robinhood, make sure to give them credit. I don't know if there's any rewards on Robinhood for sharing, but I would imagine there is. And then it will ask you to fund your account. And the great thing about Robinhood is you can start with as little as $1. So you can deposit $1, you can throw it into the S&P 500, maybe your favorite stock that you've done a little bit of research on, key point there, and just to test, to see what happens, to start to get used to how markets move, start to build that resilience. See, maybe the dollar goes down to 80 cents and you don't sell, and you're starting to build that muscle of not freaking out, and then it'll go back up, and just to kind of get a feel for volatility, how markets move, maybe get a taste without having really any skin in the game. So the next part is connecting your bank account to Robinhood. They do this through Plaid. Plaid is a very secure platform. I've used it many, many times to connect lots of different financial institutions together. They'll need your phone number, a little bit information about your bank account, and they will automatically connect those two institutions together and allow you to transfer money. So it's very, very convenient. They're going to try to offer you some kind of paid subscription. There's no need to do this, especially at the beginning. The 4.5% APY is great, but there's many other free options that give a similar annual percentage yield. But we do not want to just leave our cash in a cash account. We want to invest it in the market because we want to get far better returns than 4.5%. So maybe if you have an emergency fund, you don't want to have your money in another bank account somewhere else, you could pay the $5 then. And if you could, whatever makes sense for you. But you definitely do not need to pay the $5. Definitely want to check this high yield cash optional. So it just means any uninvested cash in this isn't a separate account, a cash account. This is cash in your stock account. Will also get the 4.5. And it sounds like that does not cost the $5 premium. So definitely no brainer. Have that checked and you'll be able to earn. And these banks that they're sweeping the money into most likely are FDIC insured. So there's no risk. All right. And here you can decide how much you want to transfer. Again, this is completely up to you and your personal financial situation. Even if it's just $1 to start, so you can start to get the taste of what investing could look like for you.
Let's start with $10.
The great thing about Robinhood is you can also set up reoccurring transfers. So making sure to pay yourself on a regular schedule, which is completely how you should see investing. This is paying yourself, your future self. You're paying the grocery store, you're paying the gas station, you should definitely be paying yourself. So you can set up a recurring schedule if that works for you, just to make sure you are dedicated to this investing journey.
Claim free stock.
Oh, here's $5.22 on us. You just made your first money investing. So yeah, claim the stock. You get to pick. Choose from companies that have the largest market cap for their respective sectors. Claim stock. Yeah, do it. So
Tesla, Lemonade.
out of these ones, I think I'd probably choose Google.
Google. Interesting.
I don't think you choose it here. I think you have to click claim stock. It's just showing you which ones. Yeah, and now you claim. Do not claim Apple. Do not claim Apple.
Don't do it.
They have lost all of their innovational ability. Tesla might be all right over the long term. It is a very expensive stock at the moment. Amazon or Amazingzon, some call it. Also great. I am super bullish on Google out of the Mag 7. I think their LLMs are very, very powerful. And they also have Waymo in the self-driving space. So they have a lot of verticals. They own YouTube. They just own so many great assets. I definitely believe in Google. I don't know much about these other ones. You should definitely do your own research, however. There you go. You own your first company. You are now an actual shareholder of one of the most valuable companies in the world. Whoa.
Isn't that crazy?
So when next time you're on Google or whatever stock you chose and you're using their product, you are using the product from your own company. All right, so for the money you deposited, if you have not done any research in any stocks and maybe you don't have the time to do so, I suggest picking a S&P 500 ETF, which will basically just follow the S&P 500 index, which is just the top 500 largest companies in the United States. There are many, many ETFs that track the S&P 500 index. They have different expense ratios, which just means the cost that you pay for someone else managing that for you. One of the best with the best returns because they can weight differently. Maybe if you're a beginner, you're not quite understanding what I'm saying. So I highly recommend you going and looking up the terms I'm using. If you do understand what I'm saying, the best one I've found in terms of 5-year annualized returns and the lowest expense ratio through a quick Google search is the IVV, which is the iShares ETF. So we're going to go ahead and sweep her first $10 deposit into the IVV iShares S&P 500 ETF. Is you picked that one, the IVV?
Yeah.
Okay. If you are making the order for purchase outside of the market hours in New York City, it will just queue that and then you'll buy in the morning when the market opens, which is no problem at all. It says your order has been queued, so once market opens next business day, your purchase will go through and then you will be participating in the wonderful democratization of the economy that we get to experience here in the United States and across most of the Western world. So,
Woo!
all right, so the last part of our video today is just taking a quick look at what our $10 initial investment and then $10 bi-weekly can look like over the next 10, 20, 30, 40 years until you retire. If you're our ages, we're in our 20s. So we have an initial investment, $10. We're contributing $20 a month. And we're going to look at this over 40 years. Now, this is the beautiful thing of compound interest. While this may seem like a tiny, tiny amount, through compound interest, these small contributions can become massive over time. So the S&P 500 typically compounds annually at around 10%. We're also going to adjust for inflation, which is usually about 2%. So we're going to take our compound rate. So this 40-year dollar amount we see will be in today's dollars. So if we didn't adjust for inflation, the dollar amount would be much higher, but obviously in 40 years, the dollar won't be worth as much. So we're going to be looking at everything in today's dollars. So again, that's our $10 initial investment that we just made, our $20 a month, which is our bi-weekly $10 buy, our transfer that we set up as well. And that is going to be at 8%, which is I think based on the average return of the S&P 500 over the last 100 years. So looking at a lot of historical data, and then we adjusted that to today's dollars, and we're going to calculate that out for 40 years. So just putting in $10 every other week with our initial $10 investment in 40 years, we'll have $62,000. The big thing to notice is at the end of the 40 years, we will have put in $9,610 of our own money. But again, that is worth $62,000. So that is around $53,000 of just gains. So you can start to see how that compounding, and if you're looking at this curve, the compounding at the very beginning is very little. So around year 11, we've put in 2,000 and the total account value is 4,000. So not that much greater, about twice as much as we put in. And then when we get into year 40, the amount that we've gained is 5 times more than what we put in. So compounding really starts to take off in those later years. One thing to note is the market is volatile, so it will not look like this beautiful curve that we see here. There will be ups and downs and pullbacks, and it's important to not sell because we have hundreds of years of history to look at. And while may not look exactly like this beautiful curve, it will be somewhat similar based off of what we've seen with historical trends. So you definitely want to get on this curve as early as possible to allow it to curve up for as long as possible. Congratulations, Sam, you've started your journey, so very proud of you, and we hope you have joined as well and started your journey. For choosing a brokerage, I highly recommend you choose one that is commission free. Those little commissions on every single buy-in that you do really diminishes your long-term returns when you're buying smaller amounts getting started out. And then the second thing is a brokerage that allows you to buy fractional shares. So sometimes these companies have crazy high share dollar amounts, in the hundreds of dollars per share. And so if you are at a brokerage that doesn't allow you to buy fractional shares, it can become a very high barrier to entry to buy into certain stocks. So, fractional shares makes buying into any stock just as attainable with any dollar amount that you choose. The big thing to keep in mind as a warning for Robinhood is they kind of gamify it to trade in and out. You do not want to be a day trader. Day traders do not do well in the long term unless you have insider knowledge or something. So we want to be long-term investors. So just be aware that Robinhood tries to make it fun to be a day trader. Do not fall into that trap if you decide to go with Robinhood. But besides that, Robinhood's a fantastic app. Stick around on this channel to continue to learn more. Do you have any questions to close this out? How was your experience setting up your account?
It was super easy, so I definitely recommend anybody doing this on their own time and referring to this video.
Make sure to hit like and subscribe. And if you have any questions, go ahead and leave them in the comments below. And if you want to learn more, you can find some more videos here on screen. So thanks for watching. Does this fly out of frame?
Yeah.
Okay. The good thing about screen recording is they won't be able to see how cracked your screen is.
It's a screen protector.